pretty hard to get your head around these numbers, right? Listen to this, okay? SpaceX, Anthropic, and OpenAI, those are three companies, and they're driving an unprecedented mega IPO wave, right? They're going to be going public, aiming to raise tens of billions of dollars at a combined public valuation approaching $3.5 to $4 trillion. Yeah, that's $4 trillion. SpaceX is going to IPO, and that's IPO in June. Anthropic's going to go in October, and then OpenAI sometime in the fourth quarter. That's a lot. Here's the big question, though. Market experts at, say, Interactive Brokers and Morningstar, they're worried and actively are debating whether the public markets possess enough liquidity to absorb this sudden $4 trillion wave of new listings. Many index providers are already preparing fast-track entry rules to accommodate these giants. This is going to be one heck of an IPO wave. Now, IPO stands for Initial Public Offering for you, those out there that aren't really familiar with that. So they're going to be offering their shares to the public, selling part of their company. So I wanted the opinion of my next guest on this latest development. So please welcome to the show Mr. Dale Smothers from Bowling Green, Kentucky, RDS Wealth. Thank you very much for coming on, sir. Appreciate it. $4 trillion. That's some pretty heady numbers.
A lot of money, Scott. You know, the trillion here, a trillion there. These numbers are getting thrown around, and I'll give you a trillion that concerns me about SpaceX is a $4 billion loss last year and continuing to plan to spend more and more trillions in the future. And that $4 billion loss last year, half of it was due to interest. Now, I'm not telling you that SpaceX is a bad company. It's an incredible company. It is a company that's on the forefront of changing the way that we live here on Earth. And Anthropic's the same way. OpenAI already been a game changer. But what you've got to realize as an investor is that these companies have stayed private for longer than most companies. This is not the Amazon of the 90s. You know, Amazon comes out to the retail investor and has access almost immediately as it's raising capital. A lot of this capital has already been raised at the private investors level with venture capitalists. And I'm afraid that SpaceX, Anthropic, OpenAI, they're going to come out so highly valued that they're going to have retail investors chasing these high valuations when it doesn't really fit their overall retirement plan, thinking that this thing's going to the moon, pun intended. And the reality is the first one that is a holder of this retail share is likely going to then immediately turn around and try to sell it at a high price, and they may find that it's went on sale between the time they bought it and the time they're actually trying to sell it. So we're telling our investors here, these OpenAI, Anthropic, SpaceX, this IPO is very, very important. It's going to transform the way the market moves for the next probably 6 months, but be very, very disciplined in what you own and why you own it.
You know, we had Erin Gibbs from Slate Stone. She's a chief equity analyst there. She was on before you, and we were talking about that executive order, the volunteer executive order that Trump signed about AI and having to let the government see their programs 30 days before they get released to the public. I asked if she thought that was going to affect anything, and she said she specifically brought up the fact that it might delay or dent something like Anthropic or OpenAI's IPO. I thought that was pretty interesting. Do you have any thoughts there?
Yeah, I would concur. I think that, you know, these executive orders, the legislation that we see coming to AI definitely has a chance to slow down our innovation, which is a concern. But on the other end of the spectrum, you know, this could very easily be an existential threat to humanity as we know it. So I think treading lightly and clearly, we can't lose the AI race to a communist regime like China. But at the same time, knowing that we understand these things before we just unleash them on the American public is extremely important. And that is hopefully what we are set to do here in the next 3 to 6 months, because in the AI world and in the space race, things move very, very quickly. I mean, you think just 2 years ago when OpenAI and ChatGPT hit the market, nowadays that seems like that was 5 or 6 years ago, because now everyone uses ChatGPT, it seems, or some sort of AI model of its equivalents.
Yeah, I mean, you bring up some great points, and one thing that you're pretty consistent with a lot of other people I've talked about is that all the good money is already being made by being involved with these IPO levels with these three companies, because when they finally do hit the market, they're going to be hitting the market at such high valuations that it's going to be hard for you to really expect a great return if you're buying it on the day that they IPO or they go to the public. You might want to stand back and let some of those people take their profits and see if those things come at cheaper prices, which I think they probably will. And then if you really feel like you still want to be involved, that would be a better time. I'll give you the last 20 seconds.
Yeah, you're exactly right. You know, with this idea that a good company doesn't always equate a good stock is something I would urge investors to pay attention to here on this IPO that is coming with SpaceX, OpenAI, and Anthropic. And our hope is that a lot of money comes off of the sidelines to buy that, if it buys it at all, as opposed to cycling these from the current leaders, NVIDIA's, Microsoft's, Apple's, into these names.
Right.
We'll see how things play out. Everybody is paying attention closely.
All right, we'll have some fun in New York tomorrow. Great to have you on the show here today. Dale Smothers, RDS Wealth, Bowling Green, Kentucky.